For NBTV, and this is Breaking Bitcoin.
Hey guys, welcome back to Breaking Bitcoin. This is your daily source for everything cryptocurrency markets and personal finance. Hopefully everyone is doing fantastic today, wherever you happen to be and however you are tuning into us today. We've got a great afternoon. It is, of course, Wednesday, first day of July, 2020. Hopefully you guys are doing fantastic out there. We've got a lot to break down today, give you guys some updates on the Cardano analysis that I did yesterday, just kind of keep you guys up to date with what I was talking about in the markets yesterday. We've got some interesting movements coming in from Bitcoin today. I published a new chart just about an hour ago, new analysis with the volume profile, fixed range, breaking down the year by year kind of seasonality and cycles of Bitcoin. And I think this is pretty telling. So we're going to get into this in a little bit more depth here in a little bit after we break down all the major markets. Day two, obviously, as you guys can tell, day two of no camera. And that's all right. Maybe we'll have the camera up and running tomorrow. But I'm just going to focus on the technical analysis, focus on some good analysis today, and answer your guys' questions. Before we begin, as always, today's show is brought to you by the Cracking Cryptocurrency Premium Trading Group. With everything going on, all of the volatility in the markets, ATR and volume being at quite lows in Bitcoin's price action, meaning that movements are coming. There's never been a better time to learn how to navigate these markets and get a hold of some of these movements. Whether you're interested in cryptocurrency, Forex, stocks, or derivatives, the Premium Trading Group certainly has you covered. Join our community of professional traders and learn how to build your own objective, data-driven strategy. If you're tired of trading with your gut or seeing poor discipline and trade management sap away your progress, make the change and join us at premium.crackingcryptocurrency.com. There are, of course, links in the description. So we're also going to be getting into the gold scare with China's kind of fraudulent behavior around its gold reserves. So we're going to get into that here in just a little bit. Before we, as always, if you guys have any questions, make sure to drop them in the live chat. The moderators are certainly there to help you out. They will direct my attention to the pertinent questions as we progress. All right, so let's start off as we normally do on the daily here. Let's have a gander. We do have an interesting movement coming out of the Breaking Bitcoin continuation filter. So for our first chart here, we're just going to be looking at what I would consider my primary PTP system, Pathways to Profit system, just an objective data-driven strategy. The first thing we see here is something that we haven't seen. The last time we saw this was back on the 22nd of June, where price actually crosses, and so far, of course, has not closed, but looking to, unless price ends up closing the daily below 9,027, then it is likely that we will get a close above the continuation filter. Now, because we are below the, so across, above, or below the continuation filter is itself a sign for a continuation trade. However, direction is very important here. Of course, we are below the baseline and we are below the initiator of the breaking Bitcoin system. Therefore, this really doesn't mean anything except insofar as signaling that one should be exiting from swing longs, for example, right? So per the breaking Bitcoin system, if an individual had happened to open up a daily short anywhere around these levels, even though with our methodology, this would not be the case where they would still be in this trade and exiting slightly, pretty much at break even, like for example, say they had taken this or this initiation signal, or continuation signal. Actually, this would have been the continuation signal properly. And then on the very next candle, we have a fully confirmed signal, an initial signal, although we would have been fine to take the continuation signal because we never broke across the initiator to the upside. But on that next candle, we did have minks confirming the sell and a rising explosion level with Water explosion. So whether one had entered here or here, this certainly is generating an exit signal to exit that daily swing short trade, which, if you guys will recall, going back to the range, I didn't take this trade myself, as I haven't taken any swing positions in this Bitcoin range for quite a while, because I have talked ad nauseum why I think that's improper. When volatility is quite low and volume is quite low, there is not enough oomph to generate trades. So all we need to do is look at volume and realize that we need to be looking at other trending markets when we're looking for trades and setups that are going to be pursuant or amenable to our PTP systems. However, just objectively, what this is indicating is a signal to exit swing short positions. However, as I broke down yesterday, whether you entered here or whether you entered on this daily close, this wick to the downside would have hit your first take profit as measured by Quadriga. You can see this one right here and this one right here. So regardless of whether you entered on this daily close or this daily close, your first take profit would have been hit, at which point your stop loss would have been moved to break even, which would have just triggered on today's push to the upside, which we're going to break down in a little bit more detail here in just a second. So not a whole lot, really certainly no signals of a future movement coming out of this, and no objective trading signal that's currently being generated. Breaking Bitcoin initiator is sitting at 94.90, so a daily close above 94.90 would begin to see things moving more toward the bullish side and begin to be setting up swing longs. Parallax, however, is still quite negative. Water explosion is still negative, but of course we do see the receding negative delta. That's not confirming longs, but just kind of the precursor, which would lead to green bars if we can actually get those and get above 94.90. And Minx is still in negative territory as far as a centered oscillator signal. As far as a line cross signal, of course, it generated the early exit or line crossover from being oversold and then crossing back above the noise line or signal line, whichever you'd like to call it, as well as back above the oversold threshold. So pretty neutral Minx right now, indicate, just below zero on the centered oscillator, so below the zero line. So generally more indicative of negative bearish momentum, but nothing to act on at this time. All right, so the breaking Bitcoin system, the primary system here is flat. It has been for quite a while. So no swing longs, no swing shorts out of this setup right here. Looking at the Donchian system, again, as with the breaking Bitcoin system, but for different reasons, not indicating any swing positions out of this area. As we've kind of broken down ad nauseum, we've gone over the time transformation exit signals, and we really haven't had good cause to take any swing longs or shorts since then, looking at the Donchian system here. So price is pulling its way back up to the 26 period Donchian. So there is a reversal baseline bounce on the table. So a reversal baseline bounce trade setup, which is where an individual would look to trade in the previous direction of the trend, as denoted by whether we are above or below the baseline. And an entry setup is generated when price returns to the baseline, which gives us a pretty good area to enter. This is following along with a very basic concept in trading, which is that you trade in the direction of the dominant trend. And when price is in a bull market, you long dips. And when price is in a bear market or a bearish trend, you short corrections. Obviously, price is just consolidating in range bound. I'm going to go over kind of my kind of carrying on from the chart analysis that we did yesterday, the chart pattern analysis, where we broke down symmetrical triangles and rectangular bottoms. We're actually going to kind of look at the philosophy, or not the philosophy, but the setup for a rectangle top, which if we were to put Bitcoin's price action into a box, get the pun, I think that that is probably the most appropriate way of looking at price. And so we're going to generate some measured movements out of that, and we're going to look at the statistics on rectangular tops and how they play out. So still consolidating. As far as the Donchian system is concerned, we look at the initiator first. Time transformation, it did cross to the upside, giving us a objective signal to go long on the 29th, right here. However, no other confirmation as our eyes turn to our confirmer. We do see that TSI is crossed under the signal line, so no longs there. And looking at dynamic money flow is still positive, indicating that more money is still flowing into Bitcoin than flowing out of Bitcoin. So no short confirmation there. In fact, quite the contrary. So nothing to do as far as this is concerned. Indicators are conflicting, so that there is no action to be taken. A little bit more of a little bit lower baseline over here, looking at 93.79. It's about a $70 divergence between the 94.60, I believe it was, with the Hall moving average 60, but still things to keep eyes on. However, knowing the sensitivity of TSI, it is likely going to be, TSI is what would hold us back if and when price does cross back above 93.79 on the Donchian system, looking to take swing longs out of that area. So it will likely be maybe 3 to 4 days, which would be good because that would set us up for a throwback if that were to occur. So let's assume that price, just in the event, the price does continue to kind of march bullishly up here, then what we're likely to experience is a throwback at some point in time, either from this resistance level or this resistance level or this resistance level, which is going to coincide probably right around the time that TSI actually gets its act together and confirms upwards trades to the long side. So that'll be good because we'll be able to take advantage of basically a dip or a pullback within the qualifying line. That's kind of the scenario where I see that kind of lining up perfectly. All right. So getting us some classical technical analysis, I updated this chart just a little bit. I made it actually really, really clean. So you guys are generally used to looking at this chart with the Bollinger Bands and Relative Strength Index. Now, those aren't very exciting to look at right now. We did cover yesterday when we looked at this, the last thing that we, on Monday and Tuesday, basically the only thing that we noted is that price had come down to the lower boundary of the Bollinger Bands and was currently bouncing up off of them, whereas RSI is just in bearish control zone. Nothing really interesting being generated from that. So this is going to be just our kind of classic traditional analysis of Bitcoin, the way that, well, I guess I chart differently than most individuals, but if I were to apply chart patterns and levels of supply and demand, which are of course existent in Bitcoin, to Bitcoin's current price action, this is basically what we'd come up with. So looking at Bitcoin's consolidation, I took some time and kind of viewed this passively and objectively. And really the only, unless one wants to make an argument that we are perhaps in the consolidation zone of a larger chart pattern, for example, let's say a measured movement upwards, which I disagree with, but I could certainly stomach the case for that, then most likely what we are generating is going to be a rectangular top. Now I have Bulkowski's Encyclopedia of Chart Patterns up over here, and for some reason the page reloaded, so I'm going to have to find that area again. And rectangular tops are on page. Where's the table of contents here? Here we go. 579. All right, so that's going to be quite a ways down. Right about sure. Okay. Just wanted to reference this as I thought it would be informative and fun. Yeah, here we go. It told me 579. I feel I've been lied to. There we go. Rectangle tops. All right. Price trends up to the formation and then oscillates between two horizontal trend lines before breaking out upwards. And in bull markets, these break to the upside about 80% of the time and reach their profit target about 80% of the time, based on about 700 historical examples. So pretty decent. And this makes things pretty simple and basically just echoes what I've been saying for quite a while. Yesterday I was chiding some analysts and traders that I had been watching on Twitter for a while, because I think that the advice that they're giving out is poor. They are saying something that is true, right? Let's play the game two truths and a lie. ATR is at extremely low levels. Volume is at extremely low levels. So actually, let's get volume up here. All right. So descending volume and descending volatility. What follows low volatility and low volume? Well, generally high volatility and high volume. So high volatility movements are generally preceded by periods of low volatility or range compression. The most common analogy that you're going to see, which is true, is that you can consider consolidation zones or rectangular areas or any area where price consolidates for a little bit as a spring, and price is compressing. The spring is being compressed, and when that's eventually one of the sides, you have two forces of pressure. You have sellers that are happy with current price and they are trying to sell their asset at these prices. That is the downwards pressure on the spring. And then you have kind of the have-nots, the individuals that want to add this asset to their portfolio, that are purchasing and applying the buying pressure. And that is the pressure that is pushing price up, or the pressure on the spring from below. Eventually, one side runs out of capital or desire. And that is when price breaks out in the direction of who is strongest in that scenario. So that is currently what's happening. Bitcoin consolidating between basically two horizontal levels. Now, I have picked these two levels as I think they're most indicative of kind of the significant levels. However, you could make an argument for different levels, but they're going to be roughly the same. Remember, lines, levels, they're not perfect. They're not exact, because at the end of the day, it's going to be the market participants who press the market buy or market sell button that actually determine the actual price. And then, of course, you have variation across exchanges. So don't get tied into those too much. But again, I have them marked out as 9,979. We could just as easily say 10,000. And then 86.31. We could just as easily say 86. We could just as easily say 87. But certainly levels to watch for, areas where we have seen clear areas of supply and demand shift the current momentum and direction of the market. Now, of course, we've got this long-term trend line that dates all the way back from 2017, marked the top in 2017, marked the top in 2019, currently marking the top in 2020. However, what I do like to see is this consolidation underneath resistance. And I'm not a huge fan of diagonal trend lines. You guys know that. However, one thing that I do like to see is consolidation underneath resistance is generally bullish and indicative of a breakout to the upside. Therefore, my overall sentiment on Bitcoin is not different. In the macro, I see price moving up from here. I do not really see price moving down from here, although I'm not going to be significantly perturbed or scared, let's say, if we see a 10 to 20% correction, which would put us down around 72.83. So I've gone ahead and taken a measured move of this rectangular formation. So just measuring not the highest high minus the lowest low. So the kind of the method that Thomas lays out in Encyclopedia of Chart Patterns is measuring subtracting the difference between the upper trend line and the lower trend line, which gives us a measured move to the upside of about 11,327. Actually, not about, but pretty much exactly 11,327. And should we break to the downside, which is the less likely scenario, but could happen, then a measured move of about 7,283. So what I think is likely to happen, we can see this attempted breakout and some pretty significant throwback right here. I would not be surprised to see that again if we do end up breaking above, which I actually think we will, 99.79. When we end up breaking above 99.79, throwback would be price is moving to the upside, and then price is thrown back to the range, generally a buying opportunity, unless price then moves to the other side of the rectangle and closes the opposite side out. I always try to draw a rectangle, like to simulate a candle with the paintbrush, and it always ends up looking like a D. So give me some, give me a little bit of a break there, guys. All right, anyways, so that's pretty simple, fairly simple analysis to understand. Just standard chart patterns, applying a methodological approach, and reviewing the rules for measure movements. So pretty simple, pretty decent there. Gives individuals who are looking to set up positions in this area a lot to go with, some firm grounding, and then they can kind of add their own spice and flavor in their trading style onto that. But it's important to have some objective levels, and it's important to have a game plan. So that's kind of where we sit on that. Other than that, nothing super interesting. I am actually short on BTC right now, and we're going to see how that ends up playing out. The reason why is because I do not think that this actually represents the bottom of the range insofar as horizontal support and resistance is concerned. I do think that it is more likely that we actually go down here and grab liquidity. Previously on this chart, I had a yellow box right here to kind of indicate liquidity right around these lows, and I think that's the most significant area of liquidity. Now, it is certainly possible that price wants to march back up here and retest resistance from here. That's absolutely fine, in which case I'll have a losing trade. But the trade thesis, like at least my current position on Bitcoin, is predicated on the idea of a continued pullback. And we do see this play out right over here, where Bitcoin is trending to the downside, reaches roughly about the same low right here, puts in a few days of upside, and then ends up selling down to the bottom of the range. That's kind of the same thing that I'd like to see here. Again, history doesn't repeat exactly, but it does rhyme. So that is, that's the hypothesis for that current trade. All right. So let's take some time here and kind of get into the weeds. Just a second. All right, so this is the daily chart of Bitcoin. I'm using the Bitfinex chart. And I've done quite a lot here. So I published this on TradingView. You guys can certainly go check this out. I added a lot more notes in the market analysis channel of the premium Discord. So our premium members are going to have a lot more access to kind of my thoughts and notes on this. And I will try to relay some of that here for the live stream. So I went back, and previously I was doing, I had been sharing a chart that I constructed, which was overall a fixed volume profile of Bitcoin's current price action and measuring back to the peak of the 2017 bull market. And while that is helpful, certainly for identifying the overall high volume node of that 3-year range, what I really wanted to see was I wanted more granular data. I really wanted to see the points of control develop year to year, and I wanted to see if there were any seasonal trends in Bitcoin's price appreciation, and to see what correlation there was between previous trend, volume, and levels of high volume nodes, and then applying Wyckoff theory to that, looking for periods of accumulation, distribution, reaccumulation, and redistribution. So we're just going to start with, we're just going to kind of go back to 2014 to 2016, and we do have an interesting, time in Bitcoin's price history. Obviously, this is the run up to 1,000, and then the just slow, gradual, well, not slow, gradual in the case of this day, but just as kind of this walk down from the peak in 2013, at the end of 2013, to the bottom in 2015 to 2016. Where we actually ended up bottoming out here in 2016. So we just have overall, accumulation, markup, distribution, and then markdown. Okay, and obviously, as you can see, because we can play the tape far forward, we have accumulation right here. So we have accumulation. This is what I'm going to label our initial accumulation for what we're going to be talking about. Because again, the way cycles play out in Wyckoff theory is you have accumulation leads to accumulation, and then you break out of the accumulation area. This leads to the phase known as markup, where price is aggressively bid up. And then eventually you reach a point where sellers are willing to sell and buyers are really no longer willing to buy at these elevated prices, except for the late stage buyers. And then you have distribution of the assets from those who accumulated to those who are foolishly trying to buy the top. So that occurs. We have a full cycle of accumulation, markup, distribution, and markdown, which leads to another phase of accumulation here, which leads to markup. Now, markup. Following markup, you do not have to go into distribution. There are several things. There is actually one other thing that can happen, and that's reaccumulation, where you were really lucky to accumulate at the initial accumulation zone. However, this asset is so attractive and you have so much interest in buying demand coming in from the buy side, that you actually reach another level of reaccumulation, which leads to another phase of markup. And then that can either be distribution or another reaccumulation. And that's what's really interesting with Bitcoin, is that we see 2 periods of reaccumulation before we actually get to distribution. And where distribution actually happens is kind of silly, but we'll get to that here in just a little bit. So, and actually I need to fix this because that is not redistribution. That is actually initial distribution. Okay. So just starting from the initial accumulation towards the end of 2015 and beginning of 2016, we have this, at the end of 2015. We have markup coming out of accumulation. And then, as I noted here, we have a previous uptrend into a high volume node. And what happens? We reaccumulate, right? We reaccumulate around the range of the high volume node. You can see the volume signature on the volume profile right here, a massive amount of volume coming in right here. And the uptrend proceeds. The uptrend proceeds all the way into the beginning of 2017. This is when many of you most likely entered into the market, perhaps. Of course, there are, going to be individuals here from before then. But in my experience, a lot of the current traders did enter into the market around 2017. So we have a previous established uptrend into the new year. And what occurs? We have reaccumulation. We have reaccumulation again, a breakout of that, and the uptrend proceeds. And then, of course, we have the 2017 run, which we were all here for, I hope, and it was good times. Now, I don't really see a good case for distribution here. It's really not long and prolonged. Of course, we do have this area of the market where there is some violent selling, of course. I don't know if you guys recall, but just right after that peak on Coinbase, actually, price flash crashed all the way down to about, I think it was 6,000 in just a matter of minutes. So certainly some heavy sell side flow. I believe I talked about that with Patrick Lorio from Nitrade. You guys can go check that interview in our cryptocurrency section. But not textbook distribution. That actually doesn't come in until right here. Right here. And what's really interesting about this area is I've pointed it out before. Of course, my hypothesis is kind of backed up also by the fundamentals, in that the $6,000 area, let's just say 6,000 to 7,000 or 5,500 to 6,500, however you'd like to slice the baby, represents the fair market value of Bitcoin. This is the fairest price that individuals are willing to pay. It's also the fairest price where individuals are willing to sell. And that is highlighted by the fact that the most buying and selling has occurred at that price. Also, this is the cost basis for Bitcoin. This is roughly the average cost to mine a Bitcoin. And so there's a lot of factors that point at $6,000 as being the actual fair market value of Bitcoin at current levels. Okay. Now, this does not factor in things like this does not factor in fundamentals that can significantly move a market or appreciate it rapidly. For example, speculation, or obviously Bitcoin has properties that make it attractive to hold in times of economic uncertainty. For example, it's a hedge against inflation. One could say it is an investment into the future of societal monetary systems. So there are other certainly very powerful fundamentals and some unique to Bitcoin that we really can't apply to other assets that we can factor into this. But if we strip all that away and just look at what price were people were at what price in the last 3 years were people the most willing to sell and to buy, on average, it was the $6,000 range. It's a good price to buy Bitcoin. It's a good average entry. And it also represents a good place to sell, a solid place to sell, if you accumulated during any of the three previous buying opportunities per Wyckoff theory. So the reaccumulation at the beginning of 2017, the reaccumulation at the beginning of 2016, or the initial accumulation in 2015. So either of those areas would have been 6,000 represents a good price to actually distribute at. Now, of course, you can say, well, I could have sold at 10, I could have sold at, but we can see what market participants actually did and see how much Bitcoin was actually sold at 6,000. Now, what's interesting is that we have moving into this high volume node in 2018, we have an established downtrend coming off of the high of December 2017. So we have an established downtrend, then we have this kind of big, wide-ranging consolidation, but still the trend is quite clear. Lower highs, lower highs, lower highs, lower highs, leading into what I believe was the actual real initial distribution. This is right here is where a lot of individuals ended up selling Bitcoin that they accumulated at any of these levels. And then what proceeded is that this was distribution and a downtrend proceeded, a very violent downtrend. And this is the last stages of the downtrend because it ended on high volume and momentum. And what occurred, this resets the cycle and accumulation begins. And what happens once the accumulation period is done, the uptrend emerged. Now, this is where we could have, this is where I would be open to criticisms of this analysis because I do not consider this distribution And I have reasons for that. There is a lack of volume. You can look at the volume signature here on the volume profile and look at all our other periods of distribution and accumulation. And then we have this. So I do not consider this to be distribution. Certainly quite a few individuals sold at these price levels, but we do not see, in my opinion, that really market shifting level of volume that we would want to see to indicate that this really was distribution and ends that Wyckoff cycle. So this is a lack of volume. I believe that this uptrend ended on a lack of buyers, buying sentiment, not the strength of sellers, as is sometimes commonly believed. And that's generally always how uptrends end, but I digress. So anyways, we have accumulation leads to an end or a pause. Let's say a lag in the uptrend leads to a downtrend. However, we have a what's called a partial rise right before the beginning of the new year. Now we have a partial rise right before the beginning of the new year into a high volume node. Now we have a previous downtrend moving into that high volume node. Even though price is moving up, the dominant trend was certainly to the downside. So we have an established downtrend moving into a high volume node. And the downtrend proceeds, right? And quite violently. And we can see that we retouch the accumulation zone and price immediately rebounds, a violent rejection. And that is, in my opinion, a very strong case that the positioned buyers at the $3,000 price level, $3,000 to $4,000 price level, have no intention of going into drawdown. No intention of going into drawdown. And we can see that from the violent rejection and the massive upswing. So now we have an established uptrend. We have an established uptrend moving into a high volume node. As we can see, we have a high volume node. And what I think is more likely to progress from this is to consider this reaccumulation, just as it was reaccumulation here and it was reaccumulation here. Then we obviously reset the cycle here, but so far we haven't seen distribution. We've seen accumulation. We've seen price move around. We've seen a retouch of that accumulation zone, which led to violent rejection. And as we move into this, as we progress to this high volume node, in my opinion, it looks like reaccumulation, and therefore the uptrend should proceed from this area. So that's essentially how I spent my morning. And I think, I really enjoy the volume profile analysis. I really enjoy the volume profile tool. So I summarized my takeaways here. The previous dominant trend, or the previous dominant direction that the market is moving into, when price moves into a new year, can help in determining the direction of that year's likely trend. But what you also need to take into consideration is where we're at in that Wyckoff cycle accumulation distribution. Consolidations or ranges occur at high volume nodes, and they can determine the direction of the emerging trend based on what we have, based on where we've been previously. And price has largely distributed throughout the 2018, excuse me, I should reword that. So in 2018, at the fair market value price of Bitcoin around 6,000, we distributed the coins that were accumulated in 2015 and 2016 and 2017 that were reaccumulated there. And this is evidenced by the violent rejection from the, so price is largely distributed throughout 2018, the accumulation that took place in 2016 and 2017. Price has yet to distribute the accumulation that occurred in 2019, in the end of 2018. And I think this is evidenced by the lack of the volume signature up here and the violent rejection from the accumulation zone. And price is currently in an uptrend that has entered into a high volume node. So I think the most likely scenario that comes out of this is reaccumulation and continuation of the uptrend. All right, so I hope you guys enjoyed that. I hope that also helps serve as a firm foundation to kind of base one's ideas or thoughts on. It really does help, particularly as an investor, to kind of step out and see the big picture. And what also helps is that we can combine this with something like this. We have a good idea of if this happens, then this, if this happens, then this, of where price is likely to move following these movements. All right, nothing really interesting as far as the CMEs are concerned today. So we'll just get into, we'll just get into my current trade and we'll talk about this for a little bit. So I did decide to short Bitcoin. I watched price, basically for the last few days, basically the last week. And didn't find anything attractive out of this area. Where we are right now, we can see the beginning of buy-side absorption right here. And I bet if I pulled open tensor charts, we could see the volume delta turn negative. But we can see the initial We can see the initial buy-side absorption from individuals attempting to market sell. This is evidenced by the wicks and also by the volume signature. Again, if we want to go look at tensor charts. Now, we have gone ahead and pierced that, pulled back and tested that as support. So again, it would be easy, actually it wouldn't be too difficult to make a bullish breakout case for this. But again, we just go back to the kind of the higher time frames for me. And my idea, at least that I'm currently trading on and putting my capital at risk, is that support is here. This is the more likely area for price to go. And that this does not actually represent the local bottom for BTC, that we actually have about 7 to 8% more downside in store, which would make me a happy camper. Now, I do see, and this is exactly how I set up my trade. I entered about 30% of my position right in this area. I'd set my limit sells right here. And then I note, obviously, that we have right around 93.50. We have local tops right here. So a lot of liquidity resting right here. This is where shorts are going to be having their stop losses. This is where longs are going to have their breakout buys positioned. And so I think that represents a good opportunity to take advantage of that liquidity and get short as well. And then if price proves me wrong and we see on, let's say, the 4-hour chart, we see strong candle closes above 9,400 with good volume, then I will be wrong in my position and go flat again and wait for a decent opportunity to get back in. So that's currently what I'm doing. What I don't like, what I don't like about what's currently happening is that price is still in backwardation. So still some pretty aggressive selling. Let's see what happens when they get up to about 93.50, which is likely where their stop losses are going to be. So when we get to that area, I'd like to see a lot of sell side liquidations, which we can see is about the 25x liquidation zone for 25x's that entered anywhere around here. We're going to get liquidated when we get up to about 93.50, and we'll see where price moves at that point in time. That's about it for BTC. Looking at the broader markets today, looking at the broader markets today, relatively uninteresting. NASDAQ doing okay. The Dow and the S&P are fairly steady as she goes. The DAX and the FTSE are fairly steady as she goes as well. The Dixie is not too much to talk about here, slipping a little bit. So I, feeling like there's a little bit more of a trepidatious risk on sentiment. I don't even know what to do about charts like this. But I feel like there's a little bit more of a risk on sentiment moving into the markets. Gold and silver futures are down today. Crude oil is up slightly. Natural gas, obviously, these aren't really impressive movements, to be quite honest. Cotton is interesting, being up about 2.25%. So, and again, relatively green day in the markets. We can see that from crypto bubbles right here. So a rising tide lifts all boats, and Bitcoin doing well moves the rest of the markets up today. Big winners today are going to be XVG, Kyber Network I was talking about yesterday, Cardano, which I did quite a bit of analysis on yesterday. What else do we have? I'm not going to talk about Balancer, VeChain doing well, and Verge, as well as Siacoin. So good trades overall. Let's give you guys an update on the ADUSDT trade that I had talked about yesterday. I also posted this on TradingView, talking about symmetrical triangles and how to trade them. We had a symmetrical triangle breakout yesterday, and we have already hit the first target that I posted, not 9165. Next target is sitting at about about 10.5 cents. 0.10419 is that final take profit there. Now, I was not able to get the full position size that I wanted because my limit order didn't get filled. Last night before I left the computer, I went ahead and market entered into about 25% of my position. So I wasn't able to get the full bite that I wanted, but I was still able to capitalize on this. And again, I'm 50% out on that trade. I've moved my stop loss to break even on that. And how I will play this though is I will look for a throwback. Again, throwback is when you have a breakout of a formation and then price is thrown back down to that formation. It's almost always a buying opportunity in the case of looking for longs. Now, they do overall hurt performance when you get a throwback. Even though price is likely to recover from that throwback and move in the direction that you had originally intended, a throwback will hurt the overall performance. So say, for example, let's look at our target 2 where we project about 10.419. Well, I might move that down about 30% because I do expect the performance to be affected by a throwback. Although the throwback represents a buying opportunity, so I'm going to leave my limit order open. So I basically now have 2 trades. So I have the position that I market entered into around 83.46, which I've taken 50% profit on, and I have my other take profit up here. So if we continue to run, I won't make as much money as I wanted, but still have quite an amazing trade. Now I have a second trade open with my limit entry at about 81.44. So if price throws back and I get filled, I will move my target 2 down about 30%, probably targeting a little bit under 10 cents. That's how I'm going to trade ADA USDT. Yeah, and by the way, I did listen to your guys' feedback about the ticker symbol. So I do have the exact same ticker symbol in the top right. So on every chart that we go to. So you guys will be able to see the ticker symbol in the top right around this area right here. All right, give you guys an update on SolveCare. As I told the premium members this morning, this trade was called for. We do have some nice sell side volume coming in here. So again, as I said last night, wait for the limit entry to get filled. Be patient on this one. I like this. I like this sell side pressure coming in. I'm going to see price pull back and retest the area of the breakout and get the actual movement out of SolveCare. So certainly be patient with that one. Let's go back and check out Troy. Very similar over here. This was our rectangular bottoms setup that we were looking for. And we are in that same area right now. We're coming off of the bottom right now on decent buy side volume. And we have had our limit orders filled. So again, just be patient. We don't really need to be worried unless price ends up moving down and closing at the bottom side of this formation, in which case that would be a losing trade, unfortunately, even if we experience throwback. However, even in that scenario, it's riskier. I cut my losses, but what individuals can do is, of course, wait for the retreat, wait for the retest, and then exit their positions there. Kyber Network and Elron as well, looking for setups, but just nothing that is really generated yet at this point in time. Watching MCO, told you guys again, took advantage of the MCO dip. Didn't buy as much MCO as I wanted because I do want to have about 5,000 MCO. And I have gotten enough for the Ruby card now. So I do have 500 MCO. I bought it's about 415, my average entry on MCO now. So I've got enough for the red card, for the Ruby card, I believe. So I'm going to wait. As I said, I'm going to wait and see if we do end up getting more downside out of MCO. A little bit less of a, certainly a trade, and I'm doing my best to manage it, but more so I want that card. So thanks, Jack, for getting me on the I need that card trade. And then watching some developments in Tezos here, but just nothing that I'm acting on yet. All right, so let's do okay, that is over here. Great. All right, so we'll leave MCO there. Let's see here. There we go. Wanted to get my green lists back. All right. Okay. And then, so we'll just take a look at what's going on in Forex right now. Still short on the Canadian Swissy. Again, did not really get worried on that pullback or that correction in the Canadian Swissy price movement. Similar with the Euro Swissy as well, short on the Euro Swissy also. And Pound Kiwi, again, overall, nothing really here to talk about, really nothing here to focus about. Just active trades that are about halfway through their progression. And nothing to do except be patient and wait for profit targets to get hit. All right. Looking at ETF exposure, ESO kind of stalling out, flagging out. But again, I do like upside on USO here. RJZ, I do kind of like this. Interesting. Yeah, not super indicative. I still do like RJZ for more continuation here out of this area. And then probably the one that I'm most happy about is the dollar UN. So really not a whole lot to report on in Forex and ETF land here. Let's look at gold. All right. Gold, palladium, silver, and platinum. All right. All right. Really no plays. No plays, just as I pointed out, right? I pointed out that I wasn't taking any plays on gold. I do like it for a little bit more upside, but again, time transformation, printing those purple dots of death, stays my hand. So no continuation on gold unless we can get back down here under 1760, which does seem likely now if we can get a couple more days of sell-side pressure coming in on gold. Palladium, after kind of peaking its head above the baseline, is immediately pulling back. And actually, although Palladium's been a little tricky to trade, of course, I've mostly wanted to stay out of it. I had a losing trade over here on Palladium. But this consolidation is very nasty. But again, if we take this, if we look at TSI finally crossing over on a pullback handle, so almost a reversal baseline bounce and a better entry. So the risk to reward here becomes really good because we'll exit if price closes below. So the upside potential here is actually pretty attractive. The risk to reward ratio on Palladium is attractive. So that is actually going to go on my watch list for a potential long later on the day at candle close. Silver USD, which I like the most, still not generating any signals. We can see True Strength Index is just not ready to see continuation of this. And overall forming roughly, I want to say kind of the same formation as Bitcoin, actually. It's that kind of rectangular consolidation. With no breakouts yet. Platinum getting hit the hardest, kind of just trending downwards in this very tight, choppy range. Not really attractive to trade. And there's really, I mean, honestly, CFDs are pretty attractive right now. There's good trades coming up, but I do not have exposure in any of them. I just have a little bit of ET. Well, I have actually quite a bit. These are the trades that I have open right here. You guys can see. All right, so let's pause from here, and I want to talk about the main story of today. So let's get into today's cryptocurrency segment. All right, we're back. Before we get into this, I wanted to thank T-Dub for the $2 tip, my friend. I really appreciate that. I don't know if you dropped a question in there. If you did, I will certainly cover it here in just a second. And I want to thank Forex Meister for your 15th month as a resub over there on Twitch. Thank you so much, my friend. Highly appreciate the support. All right, so let's get into today's story that I want to cover. And the initial article we're going to highlight is going to be coming from Cointelegraph. So, obviously the Bitcoin, v gold debate has raged on for quite a while. And we now have some highlights, or I guess we have an inflection point, because reports are coming out of China about a $2.8 billion fake gold bar and kind of how this financial corruption scheme has been allowed to unveil. So, yesterday, the news broke. Well, this would have been actually 2 days ago now because we didn't cover this yesterday. On a report coming from the Chinese media outlet Kaizen, in which a loan deal between major Chinese financial institutions and a Wuhan-based gold firm known as Kingold Jewelry has apparently gone bust when it was discovered that the gold collateral used was in fact just gilded copper bars. So individuals took, the base metal of copper and just gilded it with a thin veneer of gold and passed it off as real gold. Now, according to Kaizen, a number of the fake gold bars were just 100% copper. And the financial institutions who extended loans based on this collateral are now on the hook for major losses. And that's just reading here. It's about 16 billion yuan worth of loans were outstanding against using these bogus bars as collateral. A counterfeit metal was discovered in February when one of Kingold's lenders, Dongguan Trust, decided to liquidate its collateral to cover defaulted debts. So we have this financial institution that has extended loans for other business reasons, where it wants to liquidate its collateral, the loans that it opened up with its gold bars. So it wants to sell its gold bars to cover the debts that it was defaulting on. And they were not able to because it was not real gold. Now, following this discovery, 3 other Kingold creditors also performed tests on the gold in their vaults and found that it too was fake. Now, this is just the latest twist in the global gold market drama, with speculation that has run rampant for years that many high-profile entities inside the gold industry are vulnerable to holding fake gold, typically made from lesser metal and gilded, as I said, with a thin veneer of gold. Now, there have been allegations in recent years even to go so far as to claim that central bank gold reserves of leading nations are most likely tainted with many fraudulent gold deposits. Now, this scandal echoes back to another famous incident in 2016 when Chinese regulators found gold bars with black tungsten cores, which were used as collateral to back up about 19 billion yuan worth of loans, about 2.5 billion American dollars. And for Bitcoin supporters or proponents of Bitcoin, problems surrounding the authentication and the auditability of gold form a major argument against investing in the precious metal, or at least make a strong use case, or at least make a strong argument for investing in Bitcoin as opposed to gold, right? Fiascos like this are, of course, going to spark questions about how much gold being held as collateral around the world is actually genuine, and how practical gold really is as a reserve asset, given these uncertainties. Now, I would argue that this actually forms a bullish case for gold in the long run, if it is determined that a large quantity of the gold is actually fraudulent, and if that does not shake the idea that gold in and of itself is valuable, because it has been historically valuable. We have just overinflated the theoretical supply of it by faking it because it's not real gold. Then that would actually cause a pretty massive run on things like the COMEX. And that would cause a pretty massive run on creditors out there to claw back their actual gold. Tests would be done. And this would, in my opinion, send the price of gold pretty high if it was discovered that there was a large amount of the circulating supply that wasn't real gold. That would massively increase the amount of demand for real gold. And that demand, last time I checked, makes the price go up. Now, in the last 4 years, at least $50 million worth of fake gold, allegedly from Swiss refineries, has been found in the vaults of JPMorgan Chase. And JPMorgan Chase is one of the largest banks at the center of the bullion market. We've covered this quite a bit, where they are the largest short seller on the COMEX, so one of the largest holders of silver as well. Put the math together, 2 and 2. Fraudulent gold is a major contributor in undermining the trust and store value proposition that gold can bring with it. And this does help shine a bit of a spotlight on alternative investment options available, for example, Bitcoin. But getting back to let's get back to the current debacle. A further investigation has ended up revealing a great deal about the Wuhan-based Kingold Jewelry, who humbly refer to themselves as a company with a golden future. Now, they are listed on the NASDAQ, as well as being the biggest gold corporation listed on the New York Stock Exchange under the name of Kin Gold Jewelry Incorporated, common stock, KGJI. Kin Gold has been producing and trading gold since 2002, but as of today, it's now permanently associated with the biggest gold counterfeiting scandal in recent history. Now, it's been speculated quite a bit that China is a fairly prolific counterfeiter of various industrial metals. And they use these counterfeit industrial metals to secure bank loans. And this, basically this counterfeit collateral is known as ghost collateral. They do it so much that there's a term for it. Now, Kin Gold is one such company that we know of, which has entered into a series of extensive loan schemes with over a dozen Chinese banks and trust companies, in which their gold holdings serve as collateral. Now, to make matters worse, much of this collateral in these situations is rehypothecated, meaning often several banks actually have a claim to the same fake assets. Rehypothecated is where you are holding something as collateral, you've already given a loan for that collateral, and you decide to re-loan it out to somebody else. Obviously, this is a hustle. Well, as long as they pay me back before the other person comes calling, I'll be just fine. But what happens when both of them come calling? And this is what can happen. This is how things go wrong very, very quickly. This is why market meltdowns happen very, very quickly when there are runs on banks. Everything's fine when people are calm and they don't need their money. They don't need their precious assets in their hand right now. But wait until everybody wants to hold their means at once. And there's just not enough to go around. It doesn't exist. Now, in this case, more than 83 tons of gold, that's about 22% of China's annual gold production output, has been destroyed, or really, it never existed at all to begin with because they counterfeited it. Now, the fallout from the scandal could even go so far as threatening the Chinese economy and trust in their inventory and bookkeeping across their entire financial system. As Chinese media reports that there's a whole chain of dependencies across these banks, and creditors may be in jeopardy. Again, as I said, the center cannot hold, and when things fail, they fail very, very quickly. Now, of course, Peter Schiff could not hold himself back from commenting on this. However, the findings, the findings said more about the mentality of Bitcoin investors than gold's integrity, right? He says, quote, "This just shows you how delusional Bitcoin bugs are." Now, while cryptocurrency gets slammed by gold bugs like Schiff, Bitcoin does have a major advantage when it comes to proving its authenticity, right? It's a very straightforward process that costs nothing. It's executed automatically through Bitcoin's consensus algorithm. Now, Parallax Digital CEO Robert Breedlove, that's a name. Oh, man. Hinted that the choice would be ultimately obvious for the market as to what is the superior store of value in the digital age. Quote, "Bitcoin is more divisible, durable, portable, recognizable, which encompasses verifiability, and scarce than gold. Bitcoin is also cheaper to safeguard and less vulnerable to theft. I wonder which one the free market will select." Now, we have to realize that currently the world is awash in fiat money, which is not backed by any underlying asset. Instead, trust in government-issued currency is backed by the strength of its economy and institutions, or its productivity and future prospects. In other words, trust in fiat money is trust in a centralized entity and issuer, and this centralized trust is the cornerstone of our current financial system. It's a similar matter when it comes to gold. A great deal of trust is placed in all of the IOUs for gold when paper contracts are traded. Institutional holdings of gold have audits and disclose their reserves, but this too requires trust in the integrity of all parties involved to remain confident in the supply. Even when gold trades are settled physically and the gold is firmly in your hands, are you prepared to drill into the bullion to ensure its integrity? Are you confident the serialized bar that you hold, stamped by a Swiss or Canadian refiner, isn't a forgery that's come from China? Now, when national or central banks disclose their gold holdings, how confident can we be in the honesty of their inventory and record keeping? Auditing gold reserves on an international level is a massive undertaking, and one can never be sure the way a distributed ledger keeps. One can never be as sure in the overall supply of something like gold or anything physical as contrasted against the way a distributed ledger keeps everyone honest and able to conduct their own audit quickly and easily of any part of the supply, of any address. Indeed, thanks to Bitcoin and cryptocurrency, we have a new era of trustlessness. Individuals do not have to rely on institutions or central banks or corrupt auditors. Instead, we can place our confidence in the absence of those centralized authorities, and that self-administered control is now possible. This uplifts security and freedom. Now, Bitcoin offers traceability and accountability that other assets just cannot meet, but it still maintains a degree of privacy, along with being free of control or seizure by a third party. And it's these aspects of cryptocurrency that really make it stand out from traditional stores of value like cash deposits or even gold. And a distributed ledger that you can personally audit offers a level of transparency and trust that is just not possible with traditional bookkeeping. Now, what do you guys think? Do you see the big picture value proposition of Bitcoin and distributed ledger technology? Do you see how even when it comes to hard assets like precious metals, there are pitfalls related to trusting third parties? And do you recognize how Bitcoin is unique in this regard? Now, for the ultimate doomsday scenario, hard assets like gold, guns, ammo, and seeds may still be the way to go. But in the modern digital age, with an international economy built on trade and cooperation, Bitcoin may be the ultimate tool for keeping everyone honest and our accounting transparent. Let me know what you guys think in the comments section down below. Challenged investor dropping $2 in the tip jar. Thank you so much, my friend. He says, remember Judy Shelton's role at the Fed. There are a few things that happen in politics that make me, let's say, excited. Judy Shelton getting nominated to lead the Fed would be one of those situations. He says, just buy a silver monster box. But then, when I have to buy a silver monster, I don't know if I can afford a silver monster. Heck, I can barely afford a regular monster. Yeah, I think you are right as well, Alex. We have backwardation at these price levels. Which would make continuation a little bit more likely at this point in time. So we'll see what backwardation looks like about 93.50. We'll see if we can get a $100 movement to the upside here. And fill the rest of my order up here. All right, let me take a look at the questions today. Okay. So Peckham says, can we discuss CRO and MCO? I've just staked and his red card is en route. He's looking at buying 5,000 CRO and going all prepay on food for 10% back. Anybody want to say slow down? Yeah, I'll certainly be the guy that says slow down. I'm interested in, maybe it's a vanity thing. I don't know what it is, but I'm certainly interested in being on the right side of cool innovations and developments in our space. So taking advantage of, I'm already big on utilizing, doing the credit card hustle game, getting the most cash back rewards on my credit card. I've been doing that for quite a while, optimizing the highest interest rate savings accounts that I can find, just anything that I can do to earn more. That's what you do when you trade for a living. You look at ways to maximize your upside. Obviously it's going to be relative to your capital. I just don't want you to make a decision or buy at a price level that you look back and you're really disappointed about, right? So, if you view the entry into MCO, as an extremely long-term investment, then obviously proceed as you wish. I don't really think it makes a lot of financial sense for anybody to jump out and buy 5,000 MCO at these current price levels. Again, I bought 500. I could have bought 5,000, but I chose not to. So I'm really interested to see exactly how price kind of progresses here. But, as with all things, like I had a conversation with somebody this morning, and we were having a conversation about they were trying to get a wallet working that I wasn't super familiar with. It was kind of an obscure coin that was picked up off another exchange. And, and then they started to get a little agitated because I quickly determined that they had a lot of money in this coin. And I asked them, like, why would you put a lot of money into a coin that you don't know how to operate the wallet of? You should really pump the brakes. So just make sure you do your research, that you're comfortable, because the decision that you make, because, I've done this, right? I've put lots of capital into long-term positions, Bitcoin, Ethereum, and you have to have a good idea of what price might do, but more importantly than that, you have to have a good plan for what you will do if price reaches certain levels. At what price, how low does price have to go for you to get scared out of your position? It's probably not a good time for you to sell. And how high does price have to go before you're willing to sell? So these are all things that you need to know before you actually press confirm after pressing the buy or sell button. You need to have a plan and you just stick to that plan. And it's the same with investment. It's the same with trading. Same with dating. And then I see here, Micah, thanks for the sub, my friend. So I see here, I have a request for IOTX. We'll actually go over here. Let's check out Elrond's on the watch list. So we'll check out IOTX. Heard Amazon is using UCAM. All right. Okay. Big period of consolidation, big volume spike over here. Price moved up quite a bit relatively, I'm sure, about 142%. That's a massive volume spike right there. So couple things. Obviously, we have a very volatile, wide trading range. We've been unable to get above, let's say, 90 sats consistently and close above 90 sats. I'm just going to say 80, actually, be a little bit more conservative. We haven't been able to get any significant closures above 80. That's really marking the top of this range. All right, so that's one thing to watch out for. If we're trading above 80 sats and closing above 80 sats on a daily basis, that should let you know that we have a high likelihood of entering into a trend. Let's see here. We have a range bottom that we flipped and acted as resistance. We have our spring. We have that big explosion of volume once we get back above. I've noticed that before. All right, so we're just coming off of a big sell-off. Massive pump in volume. And prices proceeding along, consolidating on low volume. All right. Nothing to see here, huh? Let's say 47 to 50 sats as support. And yeah, let's just say 60 sats. We got about a 10 sat movement, which would take you about to 70 if we broke to the upside. So I could see a trade. A couple ways you could play this. You could attempt to play this range. So buying near 47, 50 sats, trying to sell near 60, and then trying to play a rectangular breakout out of either of these maneuvers. I don't really like, when I look at coins like this, particularly in the low sats, I'm not a big fan of the idea of like buying bottoms. Not a big fan of that idea. The reason why is because, I have experience of, let's just say I have experience of mentoring people on doing that for the last 3 years. And it's always gone lower, right? It's always gone lower. So unless it is an altcoin that I feel very strongly about, then I think to say, oh, well, you're buying the lows, relatively. You're buying the lows that we know of right now. You don't know how low price will go. All right, so I don't really see anything too attractive about IOTX. I think, kind of with that big volume spike, I think that eventually more upside, maybe even some impressive upside, right? Kind of the next significant area to come back up here and test is this previous consolidation area on 134 sats. So if we get a big breakout, that would kind of be a big target for me around 134. So if we can, close above 80, flip this as support, and actually get up to 132, that would be a pretty big trade. But right now, I don't really see any of that on the table, and I don't feel comfortable. I wouldn't feel comfortable buying these lows or these lows, because that is not, I think, the correct way to trade these. So kind of the only trade setups that I see on the table is attempting to trade the range. Selling near 60 sats and buying near 47 sats and attempting to sell near 60. And then you could attempt to play the range breakout from 60 to 70 sats. And then I would probably revisit the big formation breakout if we're able to get above 80 sats, and then take that for the big trade up to 132. And then I see a chart request for REC BTC. Request network. Same overall big picture. All right, let's drill down. So consolidation, big breakout, big volume spikes leading to a pullback, which leads to another pullback. I think this looks less good to me. This looks less. Sorry, let me be a little bit more concrete here. So we can see that these big volume spikes are preceded by further uptrend until we get here, where this big volume spike is followed by a pullback and then a push up, pullback and then a push up. I don't really like these big wicks here for continuation right now. That worries me a little bit. That looks like buy side absorption, and that's usually where price hits a wall. Now, whether or not we kind of break out above that, I don't know. But I wouldn't take any action with REC right now. I think the trade has already played out. The reversal baseline bounce, purchase and sell, basically. That's already kind of played out intraday already. So I don't really see anything attractive or any really good ideas. Let this play out. If this ends up being kind of a big distribution period, then we can wait. I would say probably 2 months at least for this to work itself into a pattern. And that's if it doesn't sell off, like altcoins tend to just violently sell off at some point in time. I don't really see anything to do here, my friend. So let's just refer to the system. All right. Yeah, we're above the baseline, but everything is pretty much telling you to get short if we close below 260 sats, which I'm not aware of anywhere you can short request network. So if I see a daily close below 260, I would exit my position and take my gain from wherever I entered down here. And other than that, we have just come back into this kind of high volume node territory, this consolidation area right here, where we were previously trading in. So let's deal with that for a little bit. We had some pretty rangy price behavior. Of course, there are going to be ways to trade it, but I wouldn't recommend doing that with these kind of assets. The big money is to be made in riding the trends. Always has been. Not in range trading these things. So I would be patient here. Let's see if we get a similar range. We can see we kind of form, not even really, because we didn't really even test the bottom, except that once. That's white space. That's white space. But let's see if we form a range like around 250 sats forming support, and let's say 350 sats as resistance. And that's about 100 sat range. So you could certainly trade that if you identify the consolidation quickly enough, which I think we just have. So those are things to watch for. I'm actually just going to go and draw those out so they're there. I'm going to say 350. Not 355. 351 will do. It's close enough. Let's see if we establish a range just like we did back here. And maybe this will be the break to the upside. So kind of similar trade setup. You can attempt to play the range, or you can wait for the breakout. All right, guys. With that being said, it's about 118. And I am starting to feel pretty tired for the day. So we're going to go ahead and pull it right there. I want to prepare for the community mentoring session that we have coming up here in a little bit. And I will see you guys tomorrow. So because we don't have the nice layout here, we'll just do this. Thank you guys so much for joining me for another episode of Breaking Bitcoin Market Update. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, please leave them in the comment section down below. Do our best to respond to you as quickly as possible. While I'm doing this outro, I'm going to go ahead and give some lemons away today to our viewers over there on DLive. Highly appreciate the support. If you guys are watching on DLive or Twitch, you can support the channel with a follow or subscription. If you guys are following us on YouTube, you guys can, of course, drop a like on the video and subscribe to this channel if you have not already. It does really help get the word out there. We do appreciate the support. If you guys would like to join the premium trading group, you guys can find all that information at premium.crackingcryptocurrency.com. Got all the information on what we do, our premium indicator suite, our premium trading group, our online trading academy, which is going live this month, and much, much more. Other than that, we will be here tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin, where we will break down the markets and provide our analysis. Thank you guys so much for all the support. I will see you guys tomorrow. Trade safely. Be excellent to one another, guys.